Good morning, traders, and welcome to Pre-Market Info. I'm Dennis Dick, and Joel Alconen is back with me. Joel, how was your trip to Northern Michigan?
Go long, Northern Michigan.
Go long, Northern Michigan.
Petoskey Harbor Springs was up there for a week, swimming in crystal clear lakes, boating, beaches. I know we got listeners from all around the country and all around the world. Get to Northern Michigan during the summertime. But, Dennis, you didn't do a very good job with the market when I was gone.
The market's looking ugly here since actually the first couple days you were gone it was okay, but the last Friday was terrible and today is just ugly. So let's talk about what we're going to talk about today. Europe troubles again. Spain yields are on the rise, and the European banks, Deutsche Bank, Credit Suisse, ING, all of these banks approaching 52-week lows or multi-year lows. Your U.S. financials are getting ugly too. Stocks like Morgan Stanley, Bank of America, J.P. Morgan, Goldman Sachs, they're all breaking down and approaching their 52-week lows. And it's also Merger Monday. We've got 3 or 4 mergers here to talk about. And earnings. McDonald's just reported. Halliburton, Hasbro also reported here this morning as well. But
Wow, what a mouthful, Dennis. Boy, you had been doing your homework. But we just got to start with these European banks. Even though our broad market rallied the last few weeks, got up to near the trading range, these things just they didn't go anywhere but down.
they just keep going down here. Even if you look, I'm just looking at the chart of Deutsche Bank here. It's trading at 28.86 this morning. So the 52-week low, 30.05, we're well below there. Joel will find how low it's been in the pre-market because it was even lower than that earlier. But look at the weekly and look at the monthlies. Like, we're breaking down. We're back here in the September lows. Back when we were September 16th, we were at 28.57. We are trading right there right now near multi-year lows here. If I go out to the monthlies even back in 2009, we got down to $20. Now, that was in the financial crisis, but man, we're not that far from there right now.
Just a critical level here in the Deutsche Bank. You've come all the way down to 28.57. That was the September low. Looking at the pre-market, coincidentally, we got to 28.21. So there's an area that that's an area that you got to hold. And I tell you, this kind of looks, this daily chart kind of looks like some of the mountains I was looking at up north. I mean, straight down. There's absolutely no reason to step in these things yet.
These things are ugly. Look at this Banco Santander chart. This is one of your big Spain banks here, SAN. Stock is trading at $4.97 right now, under $5. $5.11. If we go out further to the weeklies, that's not far enough. We go further to the monthlies, we're back at 2009 lows on this thing. This is ugly, obviously. And then there's the other thing to think about, that Spain rates are on the rise. 2-year rate on Spain bonds are 6.5% right now. And they're saying it's on the rise. Would you loan your money to Spain at 6.5%?
I would have loaded at 16.5 or 26.5.
That's what I'm saying too. Saying 6.5 is high. I'd be scared. I wouldn't want to loan my money to Spain either at 6.5% for 2 years right now. Not with the chart like this. This stuff looks ugly. Back when we were at these levels before, man, these stocks, we were in the financial crisis, and it almost looks like these European banks here are in another financial crisis here again.
Well, this Banco Santander chart, if you want to look at go long term here, you're looking at some monthlies. We had a monthly low back in September of '09 at 456, and that actually coincided with the lows in September of 2002 at 457. You had a low of 439. I mean, these things are getting perilously close to well over 10-year lows. Looking at the pre-market, Banco Santander traded down to 482, so you are getting a little bit of a pop. But they're like, just to reiterate, why are people even buying these stocks?
I just can't see it. And then I'm looking at these. I'm actually looking, and we never talk about preferred stocks on the show, but I was just looking over lots of charts here on the weekend. And if you look at some of the preferred stocks of these banks, let's look Deutsche Bank. You can look at one of the preferred stocks. Actually, some of these preferred stocks, they're capital trusts, they're hybrids between bonds and equity. But if you look at the chart of DUA, this thing's at a 52-week high. So I don't know really understand what exactly is happening here, but you've got some type of disconnect where you've got these bonds. I don't know if everybody's just hurting for yield, but this DUA yields 6.45%. You got Deutsche Bank breaking down to multi-year lows, yet these preferred stocks just keep going up. I think everybody's just hurting for yield. You got every broker putting their clients in anything that yields. This is scary here because I wouldn't want to own this thing at 6.5% yield right now. 24.72 at a 52-week high seems nuts to me. Multi-year highs. These things look like they could be good shorts. The only problem is if you short these things, then you have to borrow them, and the borrowing rates are really high on a lot of these securities. Sometimes they can be 10 or 15% a year. So if you add up a 6% dividend that you'd have to pay, plus another 15 or 10 or 15% on a borrowing rate, you could be 15 or 20% a year to borrow these things. So there's like an inefficiency being created where I think these things are artificially too high.
Do you think there's any arbitrage going on between the bank stock, maybe shorting the Deutsche Bank and buying the preferred?
I don't know. Maybe they're dumping their equity and buying preferreds, but I think it's the wrong move because back in the financial crisis, let's just take you back to the weeklies on these things. Back when in the financial crisis, these things got killed too, and it's not happening this time around. If you look at that DUA chart, look at that back from 2009. That thing got down to $4.98. That was the preferred stock. So now you're looking at these things and they're up at $25. So there's this huge disconnect here, and I think it's because these borrowing rates are too high that you don't have the arbitrage going on. And I think that's why it's not coming down. So I think it's a lack of arbitrage due to regulation because it's too expensive to borrow these stocks.
Yeah, well, this European banking situation is finally starting to take its toll, or has been taking its toll on some of the U.S. banks. Morgan Stanley at 12.33. Are you kidding me?
It's crazy. I know. We just had earnings. It got a little lift there on the earnings, but just for a couple of days, and then boom, this starts breaking down again. $12.78. We're trading $12.33 right now. This thing is perilously close to its low set in June at $12.26. Are we going to take that out today?
Well, in the pre-market, we got to 12.30, so that's
right there.
Currently, that's where we're sitting. If you go out on the monthlies on Morgan Stanley, you had the low during the crisis, and we don't even want to talk about that, folks. 10.85 was a low in December of 2008, and then you had 8.80, a low before that, 6.71. But holy smokes, we get down there.
Playing around with those numbers.
Yep. But I just going back to the dailies, don't want to get too technical on this, and just because this is a stock that we consistently talk about. Remember we had talking about that 1450 level and how it held up.
Yeah.
It held up in June. You had a breakdown, and then it busted above it again when the market rally got above $15. But then it just, these numbers, when we talk about them one day, they're going to be significant for that day trading. But lo and behold, that thing had a break again. You could have been shorting 4 days ago. You could have been shorting in that 1450 area once again. So if it ever gets back to 1450, be one heck of a short. But just to keep an eye on the numbers, not only as day trades, but just a number just to keep in your head if you're following a lot of stocks at one time.
You almost got this head and shoulders thing going on in Morgan Stanley too. You see it there. We had the 1450, and there was some institution dumping it there for days and days and days ahead of that. Maybe they were wrong for a few days when it got above there, in that 15 area when it made the head. But that right shoulder, they're dumping it there again. So there has been institutions dumping this stock. I don't like it. I think you got to be a seller of rallies, in my own opinion. And I think if it ever got back up to 14, I'd definitely probably be dumping it. But it's hard to say. It takes out that low 1226. I think it could be in a world of hurt here. So keep an eye. We're trading right there right now at 1232. Bank of America under $7 now. 691 in the pre-market.
Yep, looking at the pre-market low in Bank of America, just skimming around the bottom here at 689. That was the low. That coincides with some lows that you had back in June, 685, 690. Backing that up, you had a 672 low. But boy, this just looks. It tried to rally, tried to get back over $8 here, and now this thing just looks extremely tired here. We definitely could be heading for this low of 672 that we had back on May 21st.
Goldman Sachs breaking down as well, trading 92.65 here in the pre-market. Stock doesn't look pretty either. I mean, all of these stocks, all of these bank stocks look awful, and I can't see how the market can continue to rally when the overall financial sector looks this grim. Look at the Goldman.
Yeah, the Goldman chart, I'm telling you, it is sitting 90.43 was the low that we had last month. We're only $2 away from that. Also, you have some lows that coincide with that back in early June. So this whole 90.50 level is just huge. Call it $90 for a nice round number. But look at this thing since May. I mean, it's just melting. I mean, every rally, every spike that you have is sold. This stock is just not reacting well to anything. What do you know? When did they already have earnings last week when I was gone, or are they coming out this
No,
week?
Goldman had them already. So Goldman had them.
Oh
That's when it got
man.
that pop over the 100, just briefly. So it actually popped $2-3 on the report when you were away there, and then that was on the 17th. Got up to $100.49, but did not stay up there even for that day. Started to give it back. So ugly here too. I mean, all these financials just looked ugly, ugly, ugly to me. I mean, sometimes you think, okay, well, there's great support down here. Maybe we can be a buyer. Maybe you can try it off that 90 level, but it starts to take that out. Gets scary. The only one that's actually done well and held up well, and the name is Wells Fargo. That stock is really close to its 52-week high. That is incredible considering how ugly these other financials have been.
Yeah, I was looking at that chart over the weekend and had it highlighted in the weekly outlook from last week that it was really going to have a hard time getting up to 34.59. You had a real nice formation where you had all five highs last week over 34. Four of the five highs were basically within a dime of 34 and a quarter, 34.35. So you had some algo there selling ahead of potential size at 34.50. But now you're getting into a scary point here where it's taking out the lows. It kind of just been hovering in there at 33.60, trying to catch its breath here. And below that level, you're going to drop to right under $33, where it resided right before it had the good earnings.
Yeah, a lot of air below that 33.60 level, and we are trading below there right now at 33.35. So Wells Fargo could get ugly if it starts to trade below there, but it has held up a lot better than the other ones. Just one more to talk about Citigroup, because that one is just perched there too, sitting just above its 52-week low. We had these multiple lows at 24.61 back in June, and 24, what was the other one? 24.61, and what was the other low? 24.74. So we're at 25.28, about 50 cents from there right now. But when you consider how much the market ran up yesterday, these financials really did not participate at all. And that is a scary thought because I don't see how the market can continue to run up without the financials participating.
Yeah, really, that you got to keep an eye on that $2.46 there, or excuse me, 24.61 in Citigroup. That was low back in June. You still got a little room on that one. I mean, all these charts, whether you're looking at Citigroup, Goldman Sachs, Bank of America, while the mortgage has been a little bit more of a breakdown, but it's just been straight down. Now it's just hovering. It's like it's trying to get up, it's trying to climb, and then it just gets beat back down again. I mean, these things are, if this is any kind of a long-term determination of the market, Dennis, I don't care what the earnings are going to be this week. We could be right back down at 1,300 by the end of the week.
Speaking of earnings, McDonald's just came out with earnings here just a few minutes ago. Stock came out $1.32 versus estimates of $1.37. They missed. Getting beat here in the pre-market, down over $2 at 89.32. Closed at 91.58. So you look back here just to these couple lows we set just from a week or two ago at $89 we got down to, and then we got just below that, $89 on the 11th. So I'd keep an eye on that level. I mean, McDonald's has been one that obviously has performed pretty well over the course of the last few years. The last 3 or 4 months it hasn't done as well, but overall it has done okay if we look at it from the weeklies. Obviously we got back 100 and now we're back in this $90 area again. Where is this heading?
I don't know if my memory serves me correctly, but I remember at the beginning of the year when this thing was traded at $100, and you had all the pundits and Kramer and how well, this is
Yeah.
a growth stock that pays a dividend, and this is where your money's got to be, and the best performing stock of last year will be the best performing stock of this year, and it's been straight down since then. I just don't know. I mean, they have a steady staple of products, steady businesses. I don't know if people now that they don't have any money in Europe are not going to McDonald's anymore, or what the ramifications are. But what we can look at is this spike in the pre-market. We got down to $88 on the
Did we?
nose.
Oh wow, I didn't know it got
Yeah,
that
we
low off that
spiked
earnings.
down to 88, and then we've gotten a pop
News
up to
algo.
yeah, news algo.
News
Uh,
algo.
that's our term. Got to pop up to 90.50 now, so it's traded down $2. Once again, McDonald's is one of these, very thick stock that trades a lot of volume. So, perhaps some shorts that were underwater here. We'll be taking advantage of this in the pre-market. So, don't know if I want to be shorting the Mickey D's down $2 on the session, but keep an eye on that $88 level. That coincided with a bunch of couple lows that we had at 87.95 on July 3rd, and then below that 87.65. So I wouldn't be surprised if we did not get back down to that $88 level and just chop between 88 and 90.
Halliburton had earnings here. It's actually trading up in the pre-market, so we're down 16 and a half points on the S&P. Halliburton's trading up. Good. We can see actually we have some good news. This is our first piece of good news today. Stock is trading at 31.20 last. $31 got a pretty sizable bid there, 5,000 shares. So looks like Halliburton is going to open higher. If you're trading this today, I would keep an eye on that whole 32 area. We did spike on May 29th at 32.40. Maybe that area can provide you some initial resistance if we really go into rally mode. But the only thing, how high did this get? Because this was trading higher.
32.40.
No, no.
What are
Okay.
you talking about? I'll bet you a wooden nickel we don't get to 32.40 on this. In the pre-market, we got to pop up to 31.60.
3160 is where we've been. So
Yeah, I see
okay,
that
you're saying I'm
32.
getting excited at 30. I'm not saying it's going there. I'm saying if it gets up there, I'd probably look at that area
Oh,
as resistance. I always like to give scenarios here.
okay,
But still
okay.
being said, it's obviously doing well here. We're up 40, 50 cents on this thing. And these earnings things, sometimes money wants to find a home and they look to something that had good earnings. You never know. If this starts to just continue to cave over, though, then $30 is always a big number on this thing. So this thing turns around and just starts caving in. I think about $30 as well.
I think what's interesting, I mean, you do have a stock that's up in a down market. It is, fundamentally based, so you have to keep that in mind. But what I noticed when I was going over my charts over the weekend for being gone, you got a lot of good reports last week, and you got a lot of pops. Let's just take IBM for an example, okay? They came out with a good report, they popped, and then the next day
Yeah.
there was absolutely no follow through. So once again, the big money, the smart money, is using any kind of good news on these earnings to exit
And
stocks.
IBM ugly here this morning. Just you bring it up 189.90, so it's down a couple of bucks. We talked on the weekly outlook report how it has this gap area between 188.59. This might fill this in the pre-market. So when we're talking about gaps, we're talking about this gap on the chart. And stocks, basically, just for you newer traders out there, when you have a stock that gaps like that overnight, that creates a gap in the chart. And when it comes back through that area, it can move through that area with a little more ease, as there isn't a lot of reference points in that area. So we call that area a gap area. And you have this gap area from 192.17, which was the low on Friday, and from the high of 188.59, which was the high on Wednesday. So that whole area there is called a gap area, and when it starts to trade in that area, that means the stock can move through that area very quickly. And we're joking here, but I mean it's kind of filling the whole gap in the pre-market at 189.90 trading now.
Couple things about IBM that the trader should take note of is that on its recent break here down under 181, actually it only got to 181.85. That was almost $7 lower lower than the previous low of the move in June before the market got a bounce. So IBM is exhibiting a lot of weakness here, and we'll have to see what that forecast for the rest of the market. I think another reason why IBM is cratering like this, and just going over some of your videos from last week, I just think you had those time-based algos in there, thin stock, no volume. They were able to buy it on the half hour and sell it on the hour. Artificial buying. I mean, the activity that was going on in that stock intraday had nothing to do with the fundamentals at all. That was just an algorithm, taking advantage of low liquidity and pushing the market. They won't be in there today. They won't be in there messing in this stock. You think they will be?
No, I think you make a great point here, which I didn't even think about. We're just looking at it on the chart here. See this action, just as I'm pointing it out, from Thursday's action, where we had this time-based algo that was accumulating stock. That probably held the price up, actually. I never even thought about that, because they kept buying and buying and buying on that whole number back here. You can see this crazy-looking chart. We had this time-based algo. So that probably held the price up, and since then we've been straight down. So maybe they put the off switch on at the close on Thursday, and we're straight down Friday, and we look like we're going to be, obviously, with the overall market straight down today. So maybe that's why it was artificially held up there on Thursday, and then obviously now it's just breaking down.
Okay, just to close out the show, of course, we got to talk about everybody's favorite reporting tomorrow after the close. Apple noted in the weekly outlook that it's held a tight range, a 25-point range after bouncing up close to that 620 level. We are now breaking down in the pre-market. Yep, you got a pre-market low here. Actually got a little bit of a bounce here off 592.32, folks. And if you look just below the bottom number that I have, 592.68, that was the July 12th low. I think you could find support there if it gets back down to that level again during the regular session. And I'm sure there's a lot of people lamenting that I did sell my Apple when it got above 600 again, and coming into earnings. So it looks like people are lightening up their load on the long side in Apple Computer.
It should just give some overall thoughts here on the market. We were going to talk about a couple of those mergers. I can just mention real quickly. We don't have time. NRG is buying GEN for 0.1216 shares of NRG. NXY buying, CEO is getting bought. CEO is buying NXY, and GWR buying RA. So you have a few mergers here, all kind of smaller. Don't have time to analyze all those, but most of them are cash deals anyways. ESU2, what's happening with the E-mini? 1341, we are right at that critical support area where we have bounced off multiple times before. This whole 1340 area, critical for it to hold. Get below there, the trend might be broken. What's happening? What's your take?
Yeah, I was looking at some of the numbers that you did last week, and I'm like, wow, Dennis was really expecting some volatility. He had some crazy ranges here, and I figured, I better tighten it up a little bit. This market, kind of holds in there and just kind of grinds away. And then lo and behold, I only get down to 1332.50 at my SPOO number, and that's not even a great number. But what I want to focus on is 1339.25.
Yeah.
That was the low from last week. We got a nice bounce off there. Below that, where things would look very ugly. I think we could easily trade right down to this 1320 low. If in fact that 1339.25 low doesn't hold, I don't know if it's all going to happen today. Also, a good trick we like to point out to our traders: we are sitting down here at 1340.75, just going down, making a new low, and then popping again. Let's just keep a close eye in, what the Globex low is before the session opens. Look for a test or a bounce. If you don't get that, there will be no bounce in the market. But opening up down 17 points is a big move for the S&P. Is a big move we've seen in a while. So don't get too anxious. Just shorten off the open. Wait for some kind of pop.
That's our show for today, folks. Stay and be aware of those financials here today. They are going to be relatively weak. Trade well, and we'll be back with you tomorrow.